Welcome to Closing Time with Jeff West. I am a local real estate agent here in St. Thomas, Ontario with Street City Realty. Every week, we are going to be talking to local professionals that deal with real estate concerns in our area every single day. I've been very fortunate that my first guest is Candace Watson, a local lawyer here in St. Thomas that deals with real estate. But before we get started, a quick note. The information shared on this podcast is for general information purposes only and should not be considered legal, financial, or professional advice. Always consult with your appropriate professional for your specific situation. Good morning, Candace. How are you?
Good morning, Jeff. I'm well. Thanks for asking. How are you?
I'm fantastic. Do you want to give us a little introduction about yourself and what law firm you're at?
Absolutely. I feel like you pretty much summed it up for me already, but like you said, I'm a local St. Thomas lawyer. I practice in solicitor work. So our firm, Breitling and Watson Lawyers, there are two of us here as lawyers, myself and my colleague, Michael Breitling. Then we have a small team of about 5 support staff that help us out. My practice spans over all solicitor issues, but primarily what I deal in is real estate. It makes up the bulk of my practice here. So hopefully I have some answers to questions that you have today. I should.
Awesome. Well, I thought we'd start with a good one because as a real estate agent, we see these kinds of things all the time. But what are some of the biggest mistakes that you see that buyers make before closing? And what do they kind of misunderstand about the legal process?
Yeah, that's a good question. And, there's a lot of uncertainty on buyers' ends, questions floating around that their realtors often can answer, but sometimes they do have to go to lawyers with their questions. Some of the biggest mistakes I would say that I see them having when buying, especially first-time home buyers, is not involving their lawyer early enough. That's a tricky one. If you are purchasing a property and you wait until a week or even 2 weeks before closing, it can be quite hard to get yourself a lawyer who has the capacity and the time to do a good job for you on that deal. So that would be one of the big mistakes that a lot of realtors won't even let their clients make because they're pushing them to get a realtor. I know you do that, or to get a lawyer, sorry. I know you do that well, Jeff, but the ones who don't listen to their realtors and leave it to the last minute, that's a big mistake for sure. Another one I would say is not having their funds available for closing. So a lot of people don't realize that if they're conglomerating from multiple pools of money in order to come up with the closing funds, that often transferring from a TFSA or an RSP, something like that, is not instantaneous, and that there may be a hold or a delay. So people who wait until the final minute to get all their closing funds gathered end up sometimes in a bit of a pickle because they then have to turn around and bring in a bank draft or a certified check for their lawyer for closing day. And of course, you can't get one of those if the funds are not available in your account.
Yeah, for sure. And I find, especially with first-time home buyers, you have to make sure they're informed. They have to know about land transfer. They have to know about moving costs.
Absolutely.
We're often providing them with like movers and all of their costs. They have to be informed about. And I know I've had a couple of really recent transactions where the seller who is buying a new home didn't look into mortgage penalties. And they were kind of shocked when they found that out. For whatever reason, their mortgage broker or their bank didn't really explain fully to them about the penalties. So I know, like with our office, we try and get the documents the day the offer is accepted sent to the lawyers. So they have those documents and they're aware and can talk to the clients to make sure that they're informed about those things.
Absolutely. And I wish everyone had that same practice. It's great when you do that. It makes it smoother for everyone. The last thing people want is a surprise on closing day about funds coming in or what's needed. And to your point about the mortgage penalties, that's a really big one that people are not always well apprised of, which surprises me often because when I'm acting for purchasers and I'm going through the mortgage documents, I always make sure that that's one of the points that we go over. What will your penalties be if you choose to pay out this mortgage before the end of your term? But one of the helpful things to know, I think, for most people when they're thinking about penalties is that banks are obligated, your lender is obligated to tell you what your penalty will be. So you can contact them at any time and say, what is my mortgage penalty going to be if I were to pay out this mortgage right now? And an interesting thing to know as well is that if you have a closed mortgage, one where a penalty would apply, 99% of the time, the way that those penalties penalties are determined is that the lender or the bank will choose from two different options of how they can apply a penalty. My apologies. So they'll either say that the penalty is going to be option A, 3 months worth of interest, or they will say that the penalty is going to be option B, the interest rate differential, whatever one is higher. So just in a nutshell, essentially the interest rate differential is the one that can get scary when you're paying out a mortgage. Because essentially what the bank does is they calculate how much money they were set to make off of you in interest for the remainder of your term. They compare that with how much they're going to make at today's interest rate values if they relend that money to me or to Jeff. And if there's a discrepancy between how much they were planning to make off of you at 5% interest versus how much they're going to make off of me when they relend it at 3.8% interest, you're going to pay that difference. So that's when those penalties can get really scary, and it's worth knowing ahead of
Yeah,
time.
for sure. And what I've been seeing a lot lately is people that are now in a situation that bought during COVID and had like a 1.8% interest rate, and their mortgages are coming up, and it's like, boy, sticker shock. So I think that's why, we're seeing a lot more inventory too, is because a lot of people now, just unfortunately, those payments are going to be so much higher when they originally purchased the property and have to refinance.
Yeah, yeah, it's really sad. I feel for people who are in that situation.
Yeah, we're seeing that a lot, like a lot. A couple of other things as far as closing goes, like can you explain to people kind of what, the title search entails and kind of I guess, what the point is of doing that and why, sometimes title issues are common and can be a concern.
Yeah, absolutely. So to most purchasers, so when we're talking about a title search, just to back it up a little bit here, this is part of the due diligence that your lawyer has to complete for you as the buyer of a property. And your realtor will have put into their agreement of purchase and sale a title search date, also known as a requisition date. They mean the same things. Usually, realtors choose to put them in about 2 weeks before the closing date. And what that does is it gives a timeline to your lawyer by which they must search title to your property and make sure that you're getting good title and that there's no discrepancies or issues that are going to affect your ownership once the deal closes. If they find an issue in that title search, one that cannot be remedied by the seller before closing, and one that you as a buyer are not willing to accept, then you can get out of the deal. You can say, I'm done, I'm out of this deal, and deposit monies are returned. So that, of course, begs the question, what even is a title issue? So essentially what we're doing when we perform a title search is we're looking at the government registry, the property's history. We're checking things like, does the legal description accord with the neighboring properties, or is there an apparent overlap that's going to cause you an issue where suddenly you don't know if your garden shed's on your land, the neighbor's land, or you both own that land because there was an overlap. It also would reveal things like existing mortgages, liens, or encumbrances on the property. And 9 times out of 10, the current owner knows about those, but it's not uncommon for there to be old ones on there that the current owner thought were paid off and properly discharged. And it turns out that maybe they were paid off, but the lender never actually properly cleared them from title. So those are the big ones that we're looking for. And we're also looking for easements across the property that were undisclosed and that actually affect your use of the property. So we're not talking utility easements for telephone wires, things like that are on a lot of properties, but we're talking rights of way where a neighbor has the right to pass through your land to get to something, things that you should have known and should have been disclosed to you when you made the offer. That's what we're searching for. So does that answer the question?
It's perfect, Candace. Yeah, and I know that in this market now, we're seeing a lot more conditional offers on sale of property come in. And then, my clients, once their property becomes firm, they are starting the shopping process to go look for a new home. But a lot of them say, well, what happens if our firm deal falls apart? And what happens if we purchase another house and our deal firm falls apart? And I just want to kind of let people know that a firm deal can only fall apart for one legal reason, and that's title,
Yeah.
right? If
Yeah,
there's an issue with title, then there could be an issue on your end on the sale. And that's kind of
absolutely.
that's the only time we see that. Now, what are some of the other reasons that you found where firm deals have fallen apart? Because I know I've experienced some, and I'm just wondering what your experiences are.
Yeah. So I'll be honest, Jeff, I've been really lucky. I don't know if I'm just getting good clients or what's going on, but touch wood, I shouldn't jinx myself like this. I've never had a firm deal fall apart that is the fault of my client. So I'm hoping to keep that streak up, but I'm sure one day it's gonna end. So far, strangely, the most common reason that I've seen for firm deals falling apart has been situations where the vendor actually sold for less money than what it took to pay out all the encumbrances on the property. So essentially, they've unintentionally shortchanged themselves without doing their proper due diligence. So they haven't looked at what they owe on their mortgage or their multiple mortgages, or they've been getting into a situation of property tax arrears that have climbed up to $20,000. And by the time they add up all the mortgage payouts, realty commission, and the property tax that they're behind on, among a plethora of other possible things that could be costly, they don't have enough money and they don't have extra change in their pocket to contribute to make the deal come together. So, unfortunately, I've had that happen a few times in the past couple months, even. And I think it kind of circles back to what you were talking about earlier. These people who bought when the market was a certain way. Now it's not. They can't afford their mortgages anymore and they're in a bad situation. And then out of desperation, they've sold the house without properly accounting for all of the debts that they're going
Yeah,
to
and
pay out.
that's my fear, Candace, is that we're going to see more and more of that in the near future. Like, I'm making sure that when I've got a client that wants to sell their home and I know that they've purchased during COVID, I've had to have some conversations about the fact that, you're not going to be making money on your sale, and hopefully you're going to make up your any money that when you purchase something, it's going to be kind of a wash because you're going to be able to buy a better property at a lower value.
Sure.
However, it gets to a point now where we do ask for proof, to make sure that they're aware of their funds that they do have so that they can sell, and they're not going to get themselves into a legal situation where they've sold but can't close because they don't have enough money.
Yeah, I think that's great that your brokerage does that, Jeff. I don't know that everyone does. Well, in these couple of situations, I know for sure that the realtors did not do that, but I think that's best practices certainly, and I'm glad to hear that you do that because it's not just a matter of the deal doesn't close. You as the vendor, if you cannot close your deal, you're in a breach of contract situation. There is liability there. So essentially, your purchaser can look to you for any damages that failed closing costs them. So damages can be many things, but the big ones that are obvious and that come up in most situations are if they have to repurchase a home, if to get a comparable home, if they had to pay $20,000 or $30,000 more, you're talking damages of that, potential carrying costs or rent to get them through until they find a replacement home. So there's all sorts of things that it could come back on you as a vendor for breaching your contract. And yeah, it's not a pretty situation when that happens whatsoever.
Yeah. Yeah, it's not good, and I've only, luckily, in 10 years only had a situation once where one of my properties, my sellers, the buyers couldn't close, and when they went in with a firm offer and no condition of house sale, which it's the only time in my career that I've ever had a client go in with a firm offer like that. It wasn't my suggestion, and unfortunately it didn't come together, and it could end up still 2 years later, could end up in a court battle, which isn't
Yeah.
great it's not great for anybody.
Yeah, no one wants to see that happen. Certainly not the buyer or the seller, but not their realtors, not their lawyers either, because everyone's put a lot of work into a deal. Usually, by the time it comes to the point where you realize it's not going to come together.
Yeah. Yeah, for sure. And one of the other things I want to talk a little bit about is clauses. I know there's a lot of people, especially first time homebuyers, they don't have an understanding of how important it is to make sure, as the buyer, they protect themselves. So, and fortunately that the market has shifted a little bit now to become more of a buyer's market. Buyers have a little bit more strength as far as when they go in for offers, to include things like a home inspection condition and a financing condition, because during COVID, they were non-existent, and people were getting into houses and finding out, oh my gosh, there's issues with water in the basement, the roof is old, the AC is original, and things like that. But fortunately now buyers now are able to have a little bit more protection. Are there any kind of clauses that you would like to see more in offers or?
Yeah, I would love to see more inspection clauses for sure, but I realize that's not up to necessarily me or you, whether those make it in there. Um, Clauses that I like to see in there are repair clauses when a buyer goes through and they see something that they're not happy with. I like to see really well drafted and fulsome repair clauses. So the bane of my existence is situations where there's a clause in there saying that the seller will repair the, I don't know, what's an example? The kitchen cupboards. They'll repair the broken kitchen cupboards. And there's no actual timeline by which that has to be completed. I like to see timelines that it'll be done a week before closing or before the final inspection so that we can address it if it's not done. Because if you wait until closing day, you buy the home, you're in there, you walk in, and the kitchen cupboard's not repaired, you've lost most of your teeth here as the
Yeah.
purchaser to actually have any recourse. They already have your money, it's in their bank account. And they often, it's a game of chicken of whether you're going to bother coming after them for a $400 repair when they know that court filing fees in small claims court are that much, right?
Yeah,
So
yeah,
I
or the
like,
kitchen cupboard doesn't match the rest of the kitchen, like, you have to be really
exactly.
specific, right, with your clauses?
Exactly. You have to be very specific, and you can't be specific enough, honestly. So, well drafted clauses for repairs are one of the things I'd like to see in there. And, chattels being in good working order, that one I'm seeing more and more, which is nice. That's good that that's making its way in. That one's important. But even fleshing that out a little bit further, what is good working order to you? For example, I just had a deal recently that closed where the fridge, they get into the property and the fridge is working, but the water dispenser isn't working. That's
Right.
a gray area. Is that fridge in good working order? It's fridging. It's doing what a fridge does.
Yeah,
But
yeah.
the water dispenser isn't working. So, the more language you can put in there, the better. And that's where you and good realtors come in, getting their clients' expectations and putting them to paper. Because the reality is, kind of as you've alluded to, the clauses are drafted before I ever see them. It's usually a binding contract, or at minimum, a conditional contract that can't be altered by the time it makes its way to me. And that's where having a really good, experienced realtor who's been around the block makes all the difference. It's not always good to just use your friend's nephew just 'cause.
Just because 'cause they're your friend's nephew. Yeah,
Mhm.
you have to make sure, and I mean, I know being from St. Thomas, the local realtors here are in our city are amazing to work with. It's getting more and more difficult when we're having the agents come from out of town that don't know our local kind of our local
Decorum,
market.
procedure, yeah.
Yeah, all of that stuff, it gets to be more and more difficult. They don't even have access to our lock boxes, so then that becomes a struggle when we have showings, stuff like that. Now I'm in a situation where I have a client now that is considering purchasing a property. It's not a new build, but the gentleman that owns the property owns a contracting or a concrete company, and part of the plan is that the driveway and the back patio will have poured concrete prior to completion.
Mhm.
And that's a bit of a tricky one because what does that look like? Is it going to be stamped concrete? Is it just going to be a basic concrete pour? So, if my client does decide to put an offer in on that property, I'll probably be reaching out to a lawyer that I might know to help me come up with a clause um, that would be clear to the purchaser and what the expectations are.
Yeah, absolutely. Especially on a high ticket item like that, right? That's high stakes, the cost of pouring a
Yes.
concrete driveway, so
Yeah. Yeah.
certainly.
Now this kind of relates to clauses a bit, but like what legally do sellers need to disclose? Like what are some of the things that from a legal perspective that they need to in their
Yeah, so I
selling
don't
agreement?
think I don't I don't think I can go over it all in one
Yeah,
episode or
yeah,
we'd be
there's
here all
lots.
day, but I'll
Yeah.
give you the one that I often see confusion around. Confusion from clients and confusion from realtors. So essentially on as a seller, you are required to disclose certain kinds of defects. And there's two kind of, from a legal standpoint, there's two types of defects that the law classifies them into. There's latent defects and there's patent defects. Okay. So your patent defects are the ones that are obvious to anyone who would walk through that home. We're talking things like a big crack in the drywall, flooring that's separating, things that a reasonable person walking through, as long as they have their vision, would see and know is a defect. You as a seller are not legally required to disclose those patent defects. Those are buyer beware. The legal principle, it's Latin, it's actually called caveat emptor, which essentially does translate into buyer beware. Do your own due diligence, look carefully, and make sure that what you're buying you're happy with. Now, the other type of defect, the latent defect, that's where sellers can get into a lot of trouble. Those are the defects that may not be obvious or visible to a regular, reasonable person walking through and inspecting the property, and may or may not be visible even to a home inspector. Those are legally required to be disclosed. And if you as a seller fail to disclose those, you will be liable if the purchaser discovers that issue after closing. And what's important on that note is to realize that your liability doesn't evaporate a couple of weeks after the closing. Essentially, the way that limitation periods work in Ontario, it's the Limitations Act. Typically, the time starts, it's a time clock that starts running as soon as you, as the wronged party, so in this case the buyer who discovers a defect, once you discover the defect, the clock starts ticking and you have 2 years from then. So in theory, you could wait 3 or 4 years, all of a sudden rip out the drywall, do a renovation, and notice a massive latent defect, and then start your claim. So it's one of those ghosts in the closet that as a seller can haunt you for an unknown amount of time. So it's better to just disclose them. Now, before I scare everyone off, you as a seller are only required to disclose them if you know about them. Of course, if a mouse has chewed a wire in the wall and you don't know about it, you're not legally required to disclose that. So then the legal battle often rests on, did the seller know about that defect or not? And that one can be a tricky one to prove.
Yeah, for sure. And I've seen that a ton too. Like, and even small things which don't seem huge. Like I sold a property, it hasn't even closed yet, and they've got a living room, big, beautiful hardwood floors, and they've got a big rug on the living room floor in where they've got their dining table on it. The reason that rug is down is because a wall was removed a while ago and the hardwood floors don't match up. So
Right.
a home inspector may not see that. So right in the listing, I actually wrote that under the carpet in the living room, the hardwood floors does not match. So any agent, if they're doing their job, will see that that's in the realtor notes and make their buyer aware. And hopefully when they're doing their walkthrough or their home inspection, they're going to lift up the carpet and take a look at that.
Perfect.
And it's just a way to protect the seller, right? To make sure that they're not going to get into a position where they potentially could be sued.
Absolutely. Yeah, that is the perfect way to handle a situation like that. There's no point hiding it. It's not worth it.
For sure, for sure. Now, what is the biggest mistake with as is, where is conditions? Is there something that people need to understand about that? I know a lot of times when I'm listing properties that the homeowners never lived in. So, for example, an estate sale, I just sold a rental property that'd been a rental for 7 years and the owner never lived in the home. So we made it that the property is being sold as is, where is, with no representations and warranties. And I know there's some confusion because some people think, oh, we can't have a home inspection. That's not true.
Mhm.
Even as is, where is conditions, buyers are welcome to have a home inspection. But where do you see the confusion?
Well, I was actually gonna say what you just said. It's that people who are buying think that they have to accept the property as it is and they can't do their own due diligence and investigation to satisfy themselves that they're happy with the condition of the property. And often people assume when they see that as is, where is clause, that it means that there's something wrong with the property. And that's not necessarily the case. As you said, the person in this case, for your matter, they're selling a home they never lived in. They just simply don't know. So they can't guarantee anything. Right? It's not always a bad thing. It just means that you, as the buyer, the onus is on you to do all of the investigation and make sure you're satisfied with the condition of the property. And if you want to come back on the seller for a latent defect, you're out of luck. You were supposed to investigate it for yourself and you accepted, buyer beware, you accepted whatever that property's state is.
Yeah. And I think from an estate perspective, or even an investor that owned the property, I try and make them aware that the as is, where is condition does not mean that they can hide things they're aware of. So
Correct.
they still have to disclose known defects on the property. The one property specifically I'm talking about, the basement had water staining in the bathroom ceiling, and even though they never lived in the property, they were aware of what happened. So I attached an invoice that from the plumber showing that this is where the water staining came from, and this is what caused it. But it still means it's being sold as is, where is, but the seller's not trying to hide any of those defects that they have to disclose.
Perfect. Yeah, exactly.
Yeah.
And that's exactly the way you should handle it.
So, what do you wish realtors did more often, or less often? I guess, or things that you wish that they did more often or less often.
Wish that realtors helped to set an expectation of timelines on the closing day. That is one of the biggest bones I have to pick. So, realtors will, if they're doing their job properly, will be telling their clients that their deal could close anytime between 9 and 5, and technically, actually, potentially even extending all the way till 6 p.m. And that they shouldn't bank on an early in the day closing or book their movers on their purchase for 10 a.m. because there's a good chance they're not going to have access yet and they're going to be paying their movers to sit there. So I wish more realtors would give people that heads up because often by the time they're coming in and meeting with me, we're just a few days before closing and they may have already made their plans for that day. And I'm the bearer of bad news, telling them that I can't guarantee a closing time for them. And another thing I wish that realtors would do more or less of, depending on how you look at it, is I wish that there was a lot more caution exercised with same day sales and purchases.
Oh, yeah.
So, yeah, so those are risky. Sometimes they're necessary. I'm not saying that there's not a place for them, but I think that if a client is choosing to do that, they need to be told about the risks involved and make an informed decision. And a lot of the time I see people come in who haven't necessarily been fully informed of how risky a same day sale and purchase is. And the risk on those, just to provide some context, is that like I said previously, we can't guarantee a closing time for a transaction. And the reason your lawyer can't guarantee that is because if you're selling a home, I'm dealing with another law office who's acting for that buyer. They have to receive all of their money, get it to me, and then we have to close the deal. So if they don't have their funding until 3 p.m. in the afternoon for whatever reason, the mortgage was late coming in, your deal's not going to close until 4 or 4:30. If that's your sale and you're still planning to complete a purchase in that day, you're going to run out of time before the cutoff time. And you can only register a title transfer on the government website until 5 p.m. So there really is a deadline. And that's where it gets risky doing a same day closing. So I wish people knew a little bit more what they were getting into with those.
It's very difficult, Candace. And I, all the time, when my clients are selling and purchasing and they want a same day closing, it's just, I explain to them, the cost to bridge finance. So
Mm-hmm.
basically carry the two properties for a couple of days is well worth the
Yes.
stress, the headache, and all of that stuff in order to do that. And I know some people just aren't in a position to do that, unfortunately. And they don't have the extra funds, or for whatever reason, they want to close on the same day. And I always tell my clients, because the same day closing is where it gets really tricky, is when do you have the mover come?
Yeah. No
Because
kidding.
you have to be out of your house, have everything moved out in order for the new buyers to move in on the same day. So, you're going to look at extra moving costs. If you have the mover showing up at 8 o'clock in the morning,
Mm-hmm.
and what happens if you don't close at 5 p.m.? And I experienced that situation with my
Yeah.
mom's sale.
Right.
And it didn't close, and it was an issue with the purchaser's lawyer that we didn't get the funds in time. Now, luckily, my mom did bridge,
Good.
so that worked out fine. But the issue was the movers had to take all of their things to their storage facility, keep it on the truck overnight. So there was additional cost transporting back and forth. and then had to move it all back the next morning. So there was extra costs involved just paying the mover the extra fund. So it is really, really a tricky situation with those same day closings
It sure
for
is.
sure.
Absolutely. And even if the closings go tickety boo how they should, it's still tricky to book a mover, right? Like you said, you've got to be out of the property in order for the sale to complete. And then without fail, there's going to be a stopgap of a few hours between your sale closing and your purchase because now your lawyer has to get the money that they received from your sale over to the other law office. So for sure, you're going to be paying your moving trucks and your movers to sit there twiddling their thumbs or scrolling TikTok for 2 or 3 hours between the two closings. And that cost alone is usually more than a bridge, honestly, more than
Yeah.
the interest on a bridge finance.
Yeah. And then it gets tricky too when the movers have another job to do in the afternoon. If you book them at 8 a.m. and they've like, well, we've got a 2 o'clock booking,
Right.
then what? So it gets really, really difficult. And just going back on timeline, like I know you had said it would be nice, if more realtors did tell their clients, okay, this is when you expect to close. And the tricky situation with those same day closings is, I'm telling my clients, okay, you should try and be out of your house by noon, 2 p.m. at the latest,
Mhm.
but they're waiting for their house to close, which hasn't closed yet. So some of them don't. I've had situations where people aren't ready and they're not out of their house, and the new people are waiting with the trucks outside ready to move in because
Yep.
theirs has closed already.
Correct. Yeah. Yeah. And that brings up vacant possession, right? Contractually, I realize practically that these things do happen, but from a legal perspective, you as a seller have a contractual obligation to provide vacant possession the moment that your sale closes. It's not your property anymore. It's not that it's not insured under you. There's liability risk to you still being on that property to the new owner. And simply, they just want to be able to move in. So vacant possession really means vacant the minute it closes. And that's all your things out, you're out, and that could be as early in I've had deals close at 9:45 in the morning.
Yeah.
It can
Yeah.
happen. It's not common, but it can happen.
Yeah, for sure. And here's something I'm wondering, Candace, is I get a lot of clients that will say to me, can we move things into the garage before we buy that property? If the seller agrees, if the seller's okay with it, can we move a truckload of things into the garage? What would your legal advice be in this situation?
Legal advice is not always aligned with practical advice. I realize this.
Yes.
So I would always say don't do it. Whoever I was acting for, the seller or the purchaser, I'd say no, don't do that. Liability is not worth it. What I have had a really crafty local realtor do is she actually drafted up to save her clients having to pay me to do it. A really good it was kind of like an occupancy agreement or like a storage agreement
Yep.
that would span over it saying whose insurance was covering the contents for the time period. It was really well done, actually. I think it was before ChatGPT was popular, so I think she actually did it herself.
Oh, that's great.
So at a minimum, something that really sets out the terms, because what happens if there is a leak and everything in the garage gets absolutely destroyed that was yours? What's the expectation? You want to think worst case, unfortunately, if you're going to be doing that, but any lawyer you call is going to say, don't do it.
For sure they are. And the buyers are the ones that are taking the risk moving their belongings into that household because it may not be insured.
It
So,
may not be insured. It may not close. What
yeah,
happens if it doesn't close?
true. All your possessions are gone.
Yeah.
Yeah, yeah. So I actually have a situation on a new build, and I have clients moving to St. Thomas from a long way away, and they asked if they could put a fence up around the property prior to the completion date, and the builder has agreed and
Wow.
allowing them to do that because they know at worst, if it doesn't close, they've already got a fenced in property.
They sure do.
So yeah, so there's an agreement that's been drawn up that basically states that the buyer is going to be like the seller's not going to have any responsibility if there's damage to the sod
Yep.
with the fence going up ahead of time. But these buyers have young children. They've got a big dog and they're moving a long distance and they don't want to have to come down wait a week, get the fence in there. So they
Makes sense.
want to arrive and have it fenced in, and the builder is allowing that because they know at worst they're going to get a new fence.
Yep, absolutely. That's what
Yeah.
I mean. The practical solution is obviously often different than the legal opinion.
Yep. Yeah. Let's talk a little bit about a deal that you think could have been saved with proper legal advice. Have you ever had a
Hmm.
situation where, if the buyer or seller had proper legal advice or even money advice that a deal could have been closed? Do
Okay,
you
I
have
have one that ended up actually closing, but shouldn't have, that I can talk about.
Okay. Okay.
And a lot of heartache could have been saved.
Yes.
Um, Okay. So I had a deal at one time where I was acting for the sellers, and they had a realtor who listed the property as though it was just a purely residential property. And unfortunately, that wasn't the case. There was some agricultural land as part of this parcel. And this realtor, unfortunately, wrote the entire agreement on just the standard residential clause, didn't understand that there were HST and tax implications
Oh, yeah.
associated with selling a commercial or an agricultural property. And they wrote in that agreement that the HST was included in the purchase price.
Right.
Well, the standard situation on a commercial or an agricultural purchase is that the HST will be in addition to the purchase price. And then it's up to the buyer if they want to pay it or if they want to essentially get their own HST number. They may already have one. And if they want to self assess and work with their accountant, there are ways beyond my understanding to basically eliminate that HST. Unfortunately, this contract was written in a way that it was included in the purchase price. It was over $1 million property, so huge impacts there. And the situation was that we were trying to negotiate for the buyer to amend the agreement of purchase and sale to say it's in addition to, because they never would have had to pay it. There's a way to wash out the HST. And we were
Right.
even offering rebates from the purchase price because of the mistake the realtor had made, $10,000 off, $20,000 off, because that was way less than what the HST implications were going to be.
Right. Yeah.
And unfortunately, the purchaser had fabulous legal advice, but just was not listening to their lawyer whatsoever and said, no, a deal's a deal. I don't want the rebate. I don't want the abatement of purchase price. Keep it how it is. And he just completely didn't understand that he could have walked out of that deal not paying the HST and getting 20K off the purchase price. And it left my selling clients in a situation where they were responsible for the HST. So that was a whole can of worms between them and their realtor, and just not a good situation at all. So that was a deal that honestly I thought wasn't going to go through and somehow still did.
Yeah,
Yeah,
and I think a lot of people need to realize too that realtors carry insurance for a reason. Like
right.
we have insurance because nobody's perfect and mistakes are made, and there are times like that where that realtor could have been sued for their negligence, whether intentional or not intentional. But that's one of the reasons why we do carry, insurance. And I feel like I've had quite a few deals, and I think a lot of realtors will be in this situation where, you thought a deal wasn't going to close, but ended up closing. So kind of the example that I can think of is I had a deal where, and I know it's a simple one, but when they did title search, going back to the title, we found out that the sellers had all their appliances were rent to own. And so there were liens on all of those. There was also a lien on title for a swim spa in the
Oh no.
backyard. And the realtors weren't made aware of any of this, and it came up on title. So fortunately the sellers were able to pay the swim spa lien off. And the only way we could get the deal to close, because they had no additional funds, was the other realtor that I was working with in that transaction. The two of us decided we would pay it off with the proceeds coming out of our commission, essentially, in order to make that deal work. Otherwise, as we had talked about earlier, one of the only reasons a firm deal can fall apart is when it's a title issue, and this was a title issue.
Yeah. Well, those
So
sellers were lucky to have you and that other realtor who were willing to do that, because a lot of realtors wouldn't have been.
yeah, for sure. And I mean, I think we get into those situations sometimes where, you do what you can get a deal closed. I think I get a lot of phone calls, Candace, from friends and acquaintances who are saying, "Oh, I'm thinking about getting my real estate license." And, you have those conversations that, a lot of people don't understand kind of what we do. Like, it's 24 hours a day, 365 days a year. I've sold a house on Christmas Eve, not Christmas Day yet, but New Year's Day, I've sold one. Like, holidays don't exist. I know lawyers are are the same. Work,
Well,
work, work, work.
I get to clock out, thank God.
Yes, yes, yeah. We don't really. I have my phone off from typically 10 p.m. until 6 in the morning. I turn my ringer off, but other than that, I'm available. But yeah, it's a lot more work, I think, than a lot of people kind of realize. And I know right now it's something like 2.5 years the average real estate agent lasts after they get their license.
Wow, that's a high attrition rate. I didn't
It
know it
it
was that
is.
bad.
It is. Yeah, it's not it's I don't believe it's super high. I'm just trying to think of, what's the most expensive mistake you've ever seen? Is it
That
the HST one?
that one with the HST, yeah.
Oh, well, I've got one that was very expensive, and
Okay, let's hear it.
it's a deal that just transpired in regards to a hot water heater rental. And I think it's really important, and I do this on all of my listings and on my buyers are purchasing a house. If they find out that hot water tank is a rental, I find out who it's rented from and what the costs are. So, like, what are the monthly rental costs and what are the buyout costs?
Mhm.
Because unfortunately, there's a lot of companies now, especially taking advantage of seniors, that go door to door to sell furnaces, hot water tanks, air conditioners, and the vulnerable population think, okay, well, I need a new hot water tank, so let's put in this new hot water tank, but they don't read the fine print.
Yeah.
And, I just had a client that had to buy out a hot water tank because that hot water tank was $10,000 in order to buy it out. And the purchaser doesn't want to take that kind of contract on where they're paying $115 a month to finance a hot water tank.
Mhm. Yeah, those are really sad situations, and you hit the nail right on the head that these companies, they go around and they're predatory, quite frankly, on vulnerable populations or people who don't understand what they're getting into and don't read the fine print. So often, on top of them having these exorbitant buyout prices, like what you just referenced, what they were doing in the past is they were also slapping liens on title called notices of security interest. And so, like that deal that you had where you pulled up title and there was a laundry list of liens for various different equipment in the home, they would do that routinely, and that would be there to guarantee that they would get paid out when that house eventually did get sold. So, thankfully, the government did, I think it was June. It was in the summer of 2024. The Homeowner Protection Act was passed, which effectively banned these companies from at least from putting the liens on the homes. And now all of the old liens that they had done in the past for consumer goods, so things like an AC, furnace, water heater, those sorts of things, are deemed effectively expired and can be cleared by your lawyer from title. It doesn't, unfortunately, clear the underlying contract that you signed on saying you'd pay X dollars a month or whatever the buyout is, but at least you can clear up title to your house. But yeah, certainly those kinds of rental equipment, I wish more people had the knowledge going in and had good advice from their realtors like what you give to look into that before even listing the home, because it's not a small detail. It really changes your bottom line of what you're going to walk away with from the sale, and it informs what you're willing to accept for a price even.
Yeah, 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 for sure. Okay, I have one more topic to discuss, and then I'll let you
Okay.
go back to your full-time job here. So, can you talk a little bit about probate and kind of what that looks like with an estate sale? Because we unfortunately have an aging population, and we're going to see, I'm seeing a lot of probate sales that I've dealt with, and a lot of the sellers, when they lose a family member and they want to put the house up for sale, they call and say, okay, we want to list the house, but it's not always that simple. So I'm wondering if you can talk a little bit about that.
Yeah, absolutely. This is another one of those big topics that we could get fully into the weeds on, so I'll just keep it really surface
Yeah,
level.
Perfect.
And also, I'm going to restate the disclaimer here that if you're acting as an executor or an estate trustee and wanting to sell a family member or, a deceased person's home for them, go and get independent legal advice right away because every situation is unique. So we'll start with that. But the big things to look out for as an executor who's wanting to sell the home on behalf of the deceased family member or whoever they may be to you, and the things to look out for as a realtor are whether the application for probate has even begun. So we're really lucky here in St. Thomas that the process for obtaining probate, once your lawyer files for it, is a quick turnaround. We're talking a few weeks, 2 months tops. So it's quick. That is not the case in other jurisdictions. Every court jurisdiction is backed up a different amount. So London, you're looking at over a year. Toronto, 2 years. So you cannot list a house for a deceased person as an estate trustee without guaranteeing that you're going to have probate by the time that the closing rolls around. And for those who don't know what probate is, in a nutshell, a really simplified description of it, it's really your certificate of appointment as a state trustee. So it's where the court looks at the will and they effectively are reviewing the will, the beneficiaries, and they're appointing you as the executor and certifying your authority to deal with that deceased person's assets and to follow the terms of the will. So you need that in order to begin acting and listing and selling the house and to close it. There's some very, very small exceptions called a first dealings exception. There's certain other circumstances where you don't need to have probate to close the house, but those are rare and few and far between. So you want to make sure that you have an estate lawyer who's working with you to file that probate and that you're making sure your timelines accord with what they're telling you the expectation is for receiving probate. And honestly, if we were being as protective as possible, there'd be an escape clause for the seller that even says, if I have not obtained probate by the time this closing rolls around, this deal will be extended however long until probate is achieved and will close within 2 weeks of that certificate of appointment being issued.
Yeah, I've inserted that clause in just about every probate transaction, but
Perfect.
luckily being in St. Thomas, it's not been an issue. Like once probate's been obtained, any offers that we've received, it's certainly been
Quick.
covered.
But
So,
yeah, and the thing is, the tricky thing is as well is probate's only as fast as you are as the executor in gathering the documents that your lawyer needs to obtain it, right?
yeah.
So I'm talking the process once we've applied for it with the court, thankfully as of right now is quite fast, but it can be quite a lot of legwork to get everything gathered up and put together for what your lawyer needs to make that application. So yes, I think it's wise for you to do what you do and have an escape clause in there and to ask lots of questions. You can't be too careful with those things.
Yeah. Well, that has been amazing, Candace. I really appreciate you joining Closing Time with Jeff West as our first guest.
Well, I'm
Um,
honored. I've had a lot of fun and I'm really appreciative that I even had the opportunity to chat with you.
Yeah, it's been a lot of fun. This has been a learning process, and hopefully as we continue, we're hoping to do this weekly. Unfortunately, my producer is going on holidays next week,
Aw,
so we may have the second week maybe go into the third week. But no, I do appreciate your time. You've been great, and hopefully people watching they've learned something. I've learned something filming this that I'm looking at the screen on my laptop where I can see Candace and the video camera is straight ahead. So I'm learning that most of this podcast, I'm probably looking down. So my apologies for that. And yeah, hopefully we'll get better as we go along. But I do appreciate your time, Candace, and I hope you've had a great day. You'll be able to watch the podcast on YouTube, and we're hoping we're going to have it on Spotify as well. But I'll probably have it on my socials too.
awesome. Well, thank you so
Okay.
much, Jeff. It's been an absolute pleasure.
Awesome. Thanks, Candace. Have a great day.
Bye.
Okay, bye-bye. Thanks for joining, guys.